Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's January 26th. We do got a couple economic news releases to go over today, and we'll start off, of course, with the weekly jobless claims like we do every Thursday. So last week, we had approximately 237,000 people apply for unemployment, which January, so far this month, has been really looking good. We've been actually in about the 230 range, been averaging. But the forecast for job claims this week is 250,000. And it came in at 259,000, so a little bit higher than expectations here, but still well within the range, and it's been a very good month in terms for jobs, actually. And we're not seeing a whole lot of people being announcements for layoffs, stuff like that, and jobs seem to be picking up here. So, in other words, the economy is looking like it's picking up a lot further. Services, we got this market services flash PMI. We get two of these. And this is kind of services index where we had earlier this week the manufacturing. So anything above 50 on this type of index is expansion. So we had back in previous reporting at 53.9, and the final version comes in at 55.1, which is obviously very good, which is good. So rating right there. New home sales, as you can see, this one disappoints. So back in November we had 598,000 new home sales. Forecast supposed to be in that range in December, 595, and dropped all the way down to 536. So new home sales obviously disappointed at the end of the year, and a lot of that was, of course, attributed to the higher prices as well as higher interest rates. So after the election, of course, interest rates spiked up quite a bit, and that kind of threw a wrench into a lot of buyers as well, of course, sellers' plans and a lot of transactions. And last but not least, we got the leading economic indicators. So previous reporting in November wasn't looking as good. It was basically showing that there's a lot of uncertainty with the election. So we had a 0.1% leading economic indicator growth. After the election in December, it went up to 0.5%. So things are looking a lot brighter in terms of leading economic indicators. And kind of what this gauge kind of shows us, kind of gauges what we're looking forward towards. In the kind of the near future as to the economy, or they're expected to increase or pick up a little bit, and this is kind of predicting that the economy is going to start picking up a bit more. Stock market's up. Dow, of course, closed up. The Dow closed up at record levels yesterday. Dow continued that this morning, although S&P and Nasdaq were down a little bit and since have moved up. We got corporate earnings going on today. Some big ones like Alphabet and some of those guys, the big ones, will be releasing after hours, so we'll probably see those played into tomorrow's. But again, so far a lot of these corporate earnings have been coming in pretty positive. I'd say probably, I think the reporting we saw earlier this week, about a quarter of them, about 3/4 of the reports have been coming in at least 5% better than expected type of thing. Here's the bond market. We continue our downward slide here. So rates, of course, climbing up. We're down currently about 28 basis points from where we left off yesterday. So we did break below this first level of support. We're touching now on our second level of support here. If we break below this, we could get down to the levels we were in earlier December, the lowest levels we've had actually in about 2 years, which was right about the 100.88 range. So this will bring us way down to this level here, which is approximately about 3/4 of a point away from that. So again, hopefully this floor will hold us, keep upwards before we go down this way, but expect rates to continue going upwards, primarily because the economy is looking good. This is taking money from the bond market going into the stock market, and they kind of go back and forth. Treasuries have been going upwards, just past since about here we were at 2.3, and now we're up to about 2.5. We're almost at 2. We're looking at the 2.6 range now because it passed the 10-year Treasury past the psychological level of 2.5%, and now we're looking at another psychological level of 2.6 on the 10-year Treasury. So this kind of gives you a gauge as to where the money is flowing. It's flowing into yields on the 10-year global yields. It's also going into the stock market. So, and which of course, we're seeing higher interest rates as a result of this. All right, so be very cautious if you are out there looking to go in there. One thing that we do, not to promote, but we do lock in rates. We give the ability for those who want to list with our preferred agents. We can help them what they call list and lock. We can lock in, we can get them pre-approved, get them in their system, and then we can lock the interest rate so that way they don't have to worry about interest rates rising on them. Or if they're out shopping around for buyers, we can also help them locking in their interest rate while the rates are going up as well. So that way they can feel secure that they have that interest rate locked for an extended period until they locate that they locate their property. So if you're interested in that, just go ahead and contact me. Best way to contact me is via email to respond, and I can get you more information on that if you're interested. But meanwhile, if you want more data, I do pop up data on Twitter. So if you want more information throughout the day on the economic news, just stop over on Twitter and find me at Mike Bjork, and you'll get more updates throughout the day. All right, folks, you guys have a great day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye. Tomorrow will be a good day because we got the GDP, the final version of the fourth quarter year-end GDP for tomorrow. So that will be important data tomorrow. All right, have a great day again. Thanks a lot. Watch.